What's up, everyone? It's Scotty with MoneyVest. So what a day it has been. I have actually been given a name in our Discord of being a party pooper because I've been cautioning people and I've been telling everyone to look, it's been a great day. It's one of those days where you constantly refresh your portfolio to see how much you're up. And, a lot of our members are absolutely crushing it on the day. And nothing makes me more happy to see you guys win. Honestly, nothing makes me more satisfied and more fulfilled and more purposeful than to see each and every one of you guys make money, be successful in your trading and your investing. And the only way I am doing my job is to make sure that that keeps happening, right? That keeps happening over and over and over again. So one thing I can promise you from the beginning of my channel and my journey is that I want what's best for you. Okay, I've got your best interest at heart. And even though it may not seem like that sometimes because of the analysis and what I'm sharing is only because I'm trying my best to be objective. And even if it's like a brutal truth, right? An honest truth that I'm sharing, it is still coming from a place where I want what's best for you. So hope you guys enjoy this video and find it helpful. Again, we're going to talk a little bit about the market conditions and the technicals and how we are, again, on a risk-reward basis, getting a little bit ahead of ourselves. But hope you guys enjoy it. Again, find it helpful. Make sure that you drop a like and subscribe to the channel. If you haven't already, I would really appreciate that. Again, it helps out, grow the channel, and we're getting very close to 80,000 subscribers. So I would really appreciate the help. Share these videos with your family, friends, people who you think might be able to benefit from the market analysis. And inflation numbers came out today, so we're going to break that down as well. And also, don't forget to join our Discord. There's 3 more spots left for the investor early bird, and this is actually going to be going away for good very soon. There is a 16% annual discount that's available, and you get access to a lot of different benefits, including members-only private videos, Excel spreadsheets, and the Discord access with over 20 plus channels, including alerts, including our discussion channels as well, and our profits channel, which is absolutely popping today with so many members absolutely crushing it in the markets. And again, it makes me super happy to see everybody just having a really good time. And I would really like to see this happen every single day, but we know the markets are not going to function like this every day. It's just the nature of the market. We're not going to see such strong green days every single day. So I think it's important to be cautiously optimistic, but also be aware of the analysis in terms of technicals and market breadth and where we are in this cycle. So again, link's going to be down below. We'd love to have you on board. 16% annual discount. 3 more spots left for the early bird investor tier with the link down below. So Michael Burry revealing a new bet against chip stocks. So he is actually shorting now SOXX, which is basically the semiconductor ETF. And he's got a put position against 100,000 shares. So if you basically do 100,000 divided by 100, we're looking at 1,000 put contracts that he's got according to the filing. And the exact value of the option position is obviously not known, but the notional value of SOXX shares involved was more than $47 million at the end of the quarter. It is also not known whether Burry still holds a position or whether it's some sort of a hedge against a long position. So again, I would take that with a grain of salt. But as we know, Michael Burry is known for betting against the market very much. And he's a little bit of a contrarian sort of a trader or investor, which is one of the reasons why I feel like the success rate for his strategy and the profitability for his strategy is a lot lower, because market has obviously seen more bull markets than we have seen bear markets. And for that very reason, I think it's a little bit more challenging for him to trade on the short side when markets are just absolutely ripping like this. I mean, this is what the heat map looks like. I mean, this is absolute greenery everywhere, with Tesla up 6.25%, Amazon's up 2.7%, Google up 1.7%, Meta's up 2.3%, Nvidia's up 2.3%. We've got a lot of semiconductors and individual stocks pushing higher, with Microsoft, Apple, financials, real estate, industrial utilities, you name it, all sectors are pushing higher as well. Also, do check out and connect with me on Instagram. The link's going to be down below. The username is CastWRP. I do share, stories behind the scenes, profit loss, different things on my Instagram as well. So if you want to connect with me there, link's going to be down below, and the username is CastWRP. Now, on the day, all 11 sectors green, pushing higher. Over the last 1 week, of course, we've seen a big reversal in the markets, and over the last 1 month, it's only healthcare and energy that's kind of struggling right now. Everything else is straight up higher. Technology kind of leading the way up over 6.4%. And take a look at Russell 2000. And all that is coming on the back of yields, right? So if you basically come over to the markets, I mean, we got the NASDAQ up 2.3%. Markets just closed about a minute ago. And the Dow Jones up 490 points. And the S&P 500 up a whopping 1.9% as well. But if you take a look at the Russell 2000, right? So that's going to be IWM. That was up a little bit over 5% on the week so far and up 5.5% on the day. Like, that is an insane move to the upside here on the back of what? The yields dropping pretty aggressively. So this right here is the sell-off of over 4% on the 10-year treasuries. And I also asked on my Instagram earlier today, sub 4% incoming for the 10-year treasuries, question mark. So let me know in the comment section down below as well, because if you do end up cracking below 4%, well, that's going to be a pretty sizable move, and you could start to see two things happen at the same time. Number one, shorts covering their positions, right? Because they're short so much on treasuries, right? The hedge funds have their largest net short on treasuries. If prices start going higher, they're going to be, very much sort of forced, or not really forced, but they are going to be motivated to start covering here very soon to lock in some of the profits. And the second thing is that once, prices start to move back higher, there is going to be more and more demand for treasuries, because a lot of the people that are sitting on the sidelines that are kind of holding off on 4.5% treasuries are waiting for higher yields. And if the higher yields never come and they're like, okay, this is it, we're already at the top at 5%, we either lock it in now or we're going to be settling in for 2%, 3% a year from now. So that's when a lot of the demand comes in from endowment funds, sovereign funds, pension funds. And as a result, you see yields drop even more and prices to push higher. And that's exactly why I bought a lot of TMF last week on the very idea that there's possible potential upside here. The risk reward is very good, and the yields can start to roll over on the back of very, very good inflation numbers. Now, speaking of inflation, so if you come over to the CPI, this was nothing but a very, very good print. So on a PDF here, so you'll notice that 3.2%. All items CPI lower than what the expectations were. Core inflation, which is excluding for food and energy, increasing 0.1%, but 4% on a year-over-year basis. And that's exactly what the market wanted to see, because the expectations were 4.1 and we came in at 4%. So we were lower on all accounts when it comes to year-over-year, month-over-month for headline and core, and even some of the individual items. So for example, energy prices in full-blown deflation, shelter prices coming in much softer than the consensus of 0.3%, and food prices are also in disinflation right now. So on all accounts, very, very strong numbers coming in for inflation. Bitcoin just a little bit over 35,000, Ether just under $2,000 at the moment as well. So overall, I would say this was nothing but a phenomenal day in the markets, with so many companies. Like Magnificent 7 was absolutely charging higher, with Tesla up over 6%, AMD's up 2.6%, Apple was up a little bit over 1.4%, Nvidia up 2%, just sub 500, Amazon's up 2.25%. So needless to say that it was a very, very green day for the markets, with Enphase charging up over 16%, Upstart up 16%, PaySafe up a little bit over 27% as well. Not to mention, of course, Zim Integrated up 9.4%, Arc Genomics up over 8.85%, Fiverr. I mean, there's just like growth mania right now, with SoFi up over 6.25% as well. Now, here's the thing, and here's the message that I have for you, which is, again, why I'm the party pooper, I guess, is that when we do see rallies like these, it does kind of create this idea that, this is it. We're going back up to all-time highs, and we gotta be in, right? There's a level of FOMO that's gonna start to kick in. I totally get it. I've been there. I've experienced it. That people who have, let's say, cash sitting on the sidelines, or they're not invested, they're gonna start feeling get missed out, right? They're gonna start to feel the fear of missing out, and that's what gets all that liquidity sucked in, right? And that's the idea of investing now when the risk reward. And look, there's a difference, right? So if you are trading versus investing, there's different strategies to it, right? So if I, for example, am investing in, let's say, VUG or SMH, I know that I'm going to be holding it for the next 5 years or 10 years out. Regardless of the price, I'm going to be dollar cost averaging at a set frequency every week or every month. Doesn't really matter where the prices are. I will be buying regardless. So if that's what I'm doing, don't really care about the overbought, oversold conditions. Don't care about where volatility is. Don't care about what the macros are. I'm DCAing consistently every single week regardless, right? I'm not looking at the noise. I'm not looking at the macros. I'm not looking at where the yields are, where the interest rates are. None of that matters. I'm dollar cost averaging consistently. But when it comes to actually placing very good asymmetric risk reward trade setups, whether it's on the NASDAQ or on the S&P or individual stocks for that matter, then valuations are a big question mark. Technicals are certainly a big question mark. And then we also have to pay attention to the macros, interest rates, and what are the upcoming catalysts for the market and for that stock. So with that respect, the odds or the risk reward is very unfavorable. As brutal as it is, that's really where we are, right? We've seen a very nice momentum back higher. But just from a technical perspective, we are just not aligned well from a risk reward standpoint. And what I mean by that is, again, if you come back over to the S&P, you'll notice, again, a very nice breakout to the upside with a huge gap left now after the gap up. And the next resistance really is going to be 4,500 to as much as 4530s for the S&P. So this right here is actually going to be that chart at 4513 to be the level to watch, right? That's the same level that we have previously gotten rejected. That's the red arrow that we're coming up to. Not to mention that the RSI is a little bit over 67. And in my previous video, we talked about where we are in terms of that percentile. We're getting up to over, 60 to 70 percentile levels here on the S&P. So the higher we get, the more cautious we need to be, right? Because when prices go up, right? Yes, there's more profit, but one thing that people forget is also going up is the risk, right? Risk is going up as prices go up. When prices go down, risk goes down as well. And I think that's something that's very, very underrated. Not a lot of people talk about risk, right? Everyone wants to focus on the reward, the return, the profit, right? One of the biggest questions you get when you're investing in the stock market is what's the next big idea? What's the next big stock that's going to make a lot of money, right? What is the least asked question? What is the next big disaster I need to avoid? Or what is the next big stock that's going to not work out that I need to avoid, right? That's the other side of the coin. That's the other side of the equation that I think people forget is the risk that comes with investing. And some of the most successful investors that we know, Warren Buffett, Charlie Munger, Peter Lynch, Howard Marks, like a lot of these folks, they specialized in investing defensively, right? Investing defensively. And look, I'm going to be the voice of reason, even though I do get a lot of the comments saying, this is the bull market, like, let us enjoy it. I'm with you, but I need to kind of instill some of those observations, in my audience and in you guys as well to better understand that, okay, yes, there's reward, but it comes at a cost. Risk is also present at all times. The moment we start believing there's no risk, that's the most dangerous thing to do. That's the riskiest thing to do when we believe there's no risk. Anyway, enough of that. Resistance is going to be 4,500 on the S&P. That's a level to watch. And the NASDAQ here, also very nice move to the upside with a massive gap that it's kind of left now. And RSI getting up to 68. RSI, MACD, both of them. And the next resistance really is going to be at 14,170, 14,200. That's really where we are coming up to. And the next level is going to be all the way up here at 14,400 on the NASDAQ. So, we have seen a very nice higher high, no doubt. It's starting to kind of shift that direction once again. And a very strong breakout to the upside with, a couple gaps that are being left on both the S&P and the NASDAQ as well. Apple here, on the other hand, also a very nice move to the upside. We've got an overbought RSI and MACD for Apple, and next resistance is going to be at a close to $190 per share. Support level is going to stay put at $179, close to $180 for Apple. Talking about Amazon here also very, very nice move to the upside. We've got an overbought RSI and MACD as we discussed earlier, and it's coming up to that resistance at 145, 146 for Amazon. Talking about Tesla, very, very nice rebound for Tesla here. Very, momentous. I don't know if that's a word, but very strong momentum on the day, and resistance is going to be at close to 237 $240 with the support level sitting inside this green rectangle in the 212 to sub $200 per share for Tesla. So if you do get a breakout, next level is going to be at that lower high at 250s. So that's going to be inside this downtrending channel for Tesla moving forward. Talking a little bit about NVIDIA here. NVIDIA, crossing over $500. No, I think it was at 498 on the day, 498.34. But of course, getting up to that resistance and incredibly, overbought here on the R side over 70. MACD also pushing up, so very, very strong move to the upside since October. It's up over 25%, and of course that is going to be that next resistance level to watch for NVIDIA at $490, $500 per share inside this red rectangle, and support level is going to stay put at $400. So it's really just been a lot of consolidation sideways for NVIDIA, and it's pretty much trading at an all-time high at the moment. So again, huge congratulations to anybody who's been trading or investing in NVIDIA. AMD, on the other hand, up over 2.6%. So also very, very overbought on the R side MACD. It's been pushing higher. So very nice move to the upside, very nice higher highs and higher lows. We've been talking about advanced micro devices and how it is, in my opinion, one of the higher quality, higher growth names in the semiconductor sector. That's one of the reasons why SMH has been at the top of my list for ETFs dollar cost average into, and it's up another 3% today. But you can see very, very overbought on the back of NVIDIA, AMD, and a lot of chip stocks that have been pushing higher. But this has been a very, very solid run up on SMH as well. But going back over to AMD, support level is going to stay put at 112 down to about a low $100 level. And of course, resistance is going to stay put at 119 to $120 per share for advanced micro devices. Talking about PayPal, and PayPal also kind of came to life on the day today, surprisingly so. It was up a little bit over 4% on the day. You don't see that very often for PayPal. So resistance is going to stay put at $57, $56 per share, kind of in line with this level. And support level is going to be at $50, $51 at the moment. So lots of consolidation. Next resistance at $65 for PayPal. And again, that's only if you do actually get a breakout above that level. Talking about Visa, and Visa also pushing higher very nicely, getting a breakout over 245, and the next resistance is going to be $250 per share. So this right here is going to be that next level to watch for Visa, and support level is going to stay put at 245 now moving forward. Talking about Meta platforms, and Meta here on the day, also getting a very nice breakout. 336 is where we are, up 2% on the day. Very nice move to the upside. We're going to go ahead and turn these levels into a new support for Meta. And the overall direction for a lot of the individual stocks has now shifted, up from a horizontal pattern. So NVIDIA got a breakout, Meta got a breakout, AMD got a breakout. Not to mention Apple and Amazon also shifted that direction to higher highs. We still have to wait and see for higher lows, but the overall direction is very much in favor for the bulls, and we're seeing a very nice breakout to the upside. So that's pretty good, but while also understanding of the fact that a lot of these stocks and the momentum that we're seeing is creating somewhat overbought levels that eventually could lead to a little bit of a pullback as well. A lot of the market breadth indicators will get updated later, so I may actually end up doing a video on them at a later point. But this right here, these are S&P 500 stocks that are trading above or below their 20-day moving average. And you'll notice that right now we're sitting at about 66%, but that's also as of Monday. So as of yesterday, so we're going to have to wait and see where this ends up being. And my guess is that this is probably going to be over 75% after today's rally that we just witnessed. So things to keep in mind, of course. I'll do a separate video on that as well. Tomorrow we've got PPI numbers that are coming out. So moving forward, we've got Netflix here. Netflix also has been one of the companies that has been on a very strong rally, up almost 1%, but coming up to that resistance at around 440 at 450. Again, RSI MACD on the overbought side, we're coming up to that resistance. So I think it's really important to keep in mind and be more cautiously optimistic moving forward. Talking about Google, a very nice move to the upside. It's a weird pattern where it gapped down, went back up, and then it gapped up. So it left the gap both times. Both times it wasn't able to fully fill this gap. So this right here, it left a huge gap, and then it sold off further, pushed back up, filled in majority of that gap, and then just when it was about to fill the rest of it, gapped up again and didn't really come down. So this right here is still a gap in the 134, 135 levels for Google. And next target resistance is going to be $139 to $140, with the support level obviously sitting at around $126 per share. Talking about Microsoft here, Microsoft's the real one that kind of scares me a little bit. 366 is going to be that support here for Microsoft. And of course, I don't have to mention it, but the RSI MACD very overbought and hitting a new all-time high at just under 372. Market cap sitting at $2.7.5 trillion. Apple sitting at 2.9. So $200 billion, only $200 billion more for Microsoft, and it's going to be the most valuable publicly traded company in the world. And last but not least, we got Enphase with a monstrous rally up over 16% on the day, recovering back up very nicely, back over $91 per share. And again, we've been talking about this stock and company for a very long time, and I have no doubt that this is going to be one of the stronger recoveries for this company and of course when the yields continue to fall. This again gives me the vibes of Meta and Tesla and Nvidia and a lot of these companies that were getting sold off on the back of a weaker macroeconomic outlook and just things that were out of the company's control. But fundamentals, as we've talked about, are still pretty solid and very strong. And that's really what it comes down to, right? Short-term price action is absolutely irrelevant of long-term company performance. And as long as the company's performance is good on a fundamental basis, the price will follow. Short-term volatility, can take the price higher and lower significantly, but what really matters over the long term is how the company is doing on an underlying business and fundamental standpoint. So for Enphase, I think that's still pretty solid, profitable company with lots of cash, little to no debt, growing margins, growing cash flows. So I like it. I like Enphase from a long-term perspective. Time will tell if the market agrees or not, but very strong day for Enphase. And then finally, we got Costco. And Costco here on the day also with a very nice breakout. This right here is the overall technicals for the company. And, it looks like we're kind of approaching the all-time high for Costco at $603. And this is the huge breakout above this area of resistance, which is now going to be turned into a support for the company as well. So I hope you guys enjoyed this video and found it helpful. Make sure that you drop a like. Don't forget to subscribe to the channel, join our Patreon and Discord. Link's going to be down below. Access to all the spreadsheet, members-only videos, and Discord channels as well. And as always, drop a like, subscribe. Let me know in the comment section down below what do you think about the markets from today. Happy investing. I'll see you all in the next video.